Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts and do some TA. We'll do some more longer term analysis. We'll compare the 2013 bull run to the current bull run. We'll look at the 2-week chart in detail and look at some interesting comparisons between these two cycles. So if that sounds interesting, stay tuned and let's get straight into the charts. I just want to go over some things from that intro there in a bit more detail. And we're looking here on the 2-week Bitcoin chart. We're going to compare the 2013 bull run here to the current bull run. In particularly looking at the RSI here on the 2-week chart. So I do have these parallel lines drawn here on the chart. We are starting it on this low here on the RSI and on the current cycle this low here. We noticed the low below that was the bear market low here back in 2011, and the low before this one here was also the bear market low in the current cycle. We're looking at it from the next low here. This was the stock market crash back in March, and that's where we're starting these parallel lines on the RSI, and we're taking it to the top of the mid-cycle peak here back in 2013. And also what I believe to be the mid-cycle peak in this current bull run. We also have these other lines here drawn on the RSI, and as you could see in that intro, I did take you through them step by step, and all of these lines are parallel, but we can see after this initial run up here, we came up to a peak before a pullback, and these pretty much line up here. This one was slightly higher using these parallel lines. Then we did have a pullback, and this yellow line lines up with the pullback in the current cycle here. And then we had this massive run up to the mid-cycle peak, quite similar to what we had here in the current cycle. And then of course we had a big pullback here mid-cycle, and this orange line marks the bottom, and going across here we had this mid-cycle pullback. We can see these are relatively close, these pullbacks, when looking at this 2-week RSI. And now we have had a nice bounce off of there and are currently getting a pullback. We got a similar bounce here, and we are getting that pullback now. These aren't exactly the same, but they are quite similar, these movements, mainly with the peaks and the major lows. And finally, we did have the bull market peak here, and we would be expecting that peak to be at a similar level here in the current bull run. But then what I did is using this low here, the low after the bear market low, and I've just done a bar pattern here and copied this pattern from that point to the peak, and then I've just applied it to the current bull run, starting it at the same relative low. So applying that bar pattern here, what we can see is a lot of the peaks and the lows do line up. We can see here this peak here before the pullback. This is the 2012-2013 bull run in orange, and the current cycle we can see we peaked on that red candle, and we can also see this peak here in the mid-cycle also lines up with the mid-cycle peak here, and the low on that mid-cycle pullback 2013 is one candle off here. We did bottom out here one candle before, and I'm projecting that the bull market top would be at a similar location, which would be around the 6th of December or possibly 22nd of November. So within a one candle range here, possibly as far as the 20th of December. So just looking at that side by side now, we can see that the peaks do line up quite well, and also some of the lows. So we can see we had a peak here in 2012 on this 2012-2013 bull run, and we also peaked here around August 2020. So at a similar time, but 8 years later, obviously we're comparing 2 cycles ahead. So these peaks here do line up on the 2-week chart. We also see this peak here was that 65k peak, and also lines up with this peak here in 2013, which was the mid-cycle peak. And then we did come down here and we see this low that we made at 29k. Just so you can see that was the low in the current cycle in the mid-cycle pullback, and the low was just one candle to the right of that. when comparing the 2013 cycle. Also at a similar time, 21st of June, 24th of June, but 8 years later. And then we do see the next peak here that we had in this recovery, and that was the 30th of August this year. And we see the peak in 2013 was at a similar time, around 19th of August. And we see how well these do line up when looking at it side by side. And then finally, the peak of the bull run in 2013 was on 25th of November. And using this model here, we can see that this would line up on the 6th of December this year for the peak. We also have these fib extensions drawn, and we're projecting it to go to this 2.272 level and that 2.27 level in this current bull market. But we'll look at that on some other charts. So this is just that fib extension. I've talked about this in many previous videos. This is the 2013 bull run here, and just using the previous bull market peak to the bear market low. This is on a log chart, and these fib extensions are based on a log scale. And what we can see is the 2.272 level was the overall peak, but we did have this mid-cycle pullback around the 1.618 level. We came back to the 1.272 level, and quite similar in this cycle using the previous bull market peak to the bear market low. We came up to that 1.618 level, back down to the 1.272, and we're projecting to go to the 2.272 level. So now I've just zoomed into that mid-cycle pullback. This is the 2013 bull run on the left. This is the current bull run and the mid-cycle pullback. And just looking at the similarities here, we did come up to that 1.618 level and had a massive rejection. Eventually we bounced and we winded our way back down to the 1.272 level. Quite similar to the current bull run, came up to the 1.618 level, had a massive pullback to the 1.272 level, and then we did recover to the 1.414 level, had some resistance there. Quite similar to the 2013 bull run, had some resistance at this level also. And we ended up coming up to this 1.545 level, which isn't a fib number level, but I've just added it to show the top on this wick. So we did push up for a high and then got slammed back down to the 1.414 level. And using that same level here on the current bull run, we can see we also came to that 1.545 level. We pushed higher and then got slammed back down. And this 1.414 level is at 41,750. This is the Brave New Coin Liquid Index for Bitcoin. It doesn't show the current day's price. So actually we did drop down here to this 39.8 level, and we have pushed back up to that 42 area currently. So we did come down below this 1.414 level slightly, but now we are around the 1.414 level. So just comparing these two, we did get quite a quick recovery in 2013 and then did push higher. So I think a similar thing will happen here eventually. Obviously, these fib levels are comparable, but the amount of time we spent around them is different. And the other thing I was showing in that intro was a tool here called the trend-based fib extension. And what this allows you to do is when you're on a logarithmic scale here, and you want to do a one-to-one move, say from this 0.618 level to the peak, and apply that move to the pullback. If you're calling this a bull flag and you wanted to do the measured move here, on the linear scale, you could just do it with a line like that and move the line to measure the move. But on a log scale, we see that the line does warp when you move it around. And that's because the line is based on the regular scale, but you're moving it on a log scale. So you use this trend-based fib extension tool here, and we were taking it from the 0.618 level, because this is where we really started taking off on the bull run here. And basically you just start at the low and take it to the peak, mid-cycle peak here, and then we bring it down to the next low. And what we see here is it makes a one-to-one extension, and it tells you the level where that's at. So just to drag that across, make it a bit more clearer, we can see that level here was at 1163, and the bull market pretty much came to that point here around 1200. We also see it lines up with that 2.272 fib extension level. So just wanted to explain how that tool worked. And then when we do the same thing here from the 618 level in this current bull run, take it to the mid-cycle peak and bring it back down to the low on this pullback. And we can drag it across to make it a bit clearer. And it will give us that one-to-one extension. We can see it lines up here at around 190,000, and that 2.272 level is at around 210,000. So I think this is a target I will be looking for here. And as I mentioned in previous videos, I do think this is a mid-cycle pullback. I know there's a lot of stuff going on at the moment with the Chinese stock market and the Evergrande collapse, but I do think that we aren't going to have a full-blown stock market crash because of it. I do think Bitcoin will recover, and I do still have this target around the 6th of December at around that 190,000 area. And what's going to make Bitcoin have this massive move? Well, what I think is going to happen in October, it will be the start of a new quarter and the end of the previous quarter. I think a lot of companies are going to announce their earning reports. I do think some companies have been buying Bitcoin when we were down in this low 30,000 area, and it hasn't been publicly announced, but they will have to declare that in the earnings report. And I do think that that news is going to trigger the retail FOMO, and it's going to trigger the rest of this bull run over the next few months. And there is some on-chain activity that Willy Woo has talked about, and he did mention that an entity did buy $1 billion worth of Bitcoin down here in these low 30,000 areas. Another entity also bought $1 billion worth of Bitcoin a little bit higher up, closer to the 40,000 area. I do think something is going to be announced on those earning reports, and it will trigger the retail FOMO. And as we know, bull markets in Bitcoin and crypto like to end in a massive hype, and we have these massive run-ups going into the end of the bull market. I do want to talk about this chart briefly. This was put out by Whale Map on Twitter, and it basically shows the last 3 months with Bitcoin. And these green circles here show where whales who hold more than 10,000 Bitcoin have been buying Bitcoin, and they still currently hold 10,000 Bitcoin. We can see they were buying in this 30,000 area, quite large here. The bigger the circles, the more amount of Bitcoin. And we saw they bought the run up here also. We can see they are currently buying this dip. So it is another sign that entities with a lot of money are still buying Bitcoin in large amounts here. And I don't think they think the bull run's over either. So just want to look at market Cipher now on the higher term time frames. This is on the weekly chart. You can see from this mid-cycle pullback we've had that we did come down on the weekly. We got that green dot and we have recovered back up, and now we are having a pullback. And we do currently have a red dot on the weekly, although it's not confirmed yet till we open the new week on the 27th of September. But I want to compare that to the 2013 mid-cycle pullback here. And this was the mid-cycle pullback, and this was the peak of that 2013 bull run. We can see we did have this big drop here on market Cipher. We got a green dot. We did start that recovery, and then we did get a red dot here, quite similar to what we're showing at the moment. And just zooming in on that a bit closer, we can see we got that red dot. We did have this decent drop here to this yellow line, which is the 20-week moving average. And then we do see several weeks after, 2 weeks after, we got that green dot around mid-October. And then we did finish off this bull run. And in quite similar fashion with this current pullback we're having here, we did pull back to this yellow 20-week moving average, and we do currently have that red dot. So I do think it might take 1 or 2 weeks here. In 2 weeks' time would be the 4th of October. And this would be where those earning reports are released. And I think that's where we're going to see that green dot come in, and we're going to finish off the rest of this bull run. And finally, looking at the 3-week chart here for Bitcoin, we can see we have come down. We did get that green dot. It got confirmed. Now we do have a red dot appearing, but this candle won't close until the 4th of October. And I do think this red dot will disappear by the time we open that 4th of October candle. And comparing that to 2013 here, where we did have this green dot down here, to this green dot after the stock market crash. We came up, we had a red dot followed by a green dot here on our way up, and we had a red dot here followed by a green dot, and then we did have the mid-cycle peak here with a red dot, and this was our mid-cycle peak with this red dot. We have come back down, we did get a green dot, and we did get this green dot here, and currently we do have a red dot, but as I said, I think that red dot will disappear by the time the 4th of October candle opens. But it does look similar to this area here, obviously, where we had the red dot, we came back down, we had the green followed by the red dot, and then the bear market started. So that is comparable here. But what you find if you do line up this run here with the current run, I'll just go to the other chart for that. So this is just lining up both cycles here on the top 2012, 2013 and our current bull run, 2020, 2021. And looking at those same points, this was the stock market crash here. We got that green dot, had the green dot here. We came up, we got a red dot here, followed by the green dot. This one was a candle earlier. The red dots here appeared at the same time relatively. And we've come down, we've gotten this green dot here, similar to this green dot. Currently we do have a red dot, but as I said, I think this will disappear by the 4th of October as we recover back upwards. And then I do think we'll finish off the rest of this bull run here. And just quickly with our current price action, I will make a separate video analyzing the more smaller time frames. What we can see if we go on the logarithmic time scale here, we connect the high here from the 65k and the next high there, and we do this straight line. We did talk about this bump and run pattern. We did break above this trend line, both when using a linear scale and a logarithmic scale, and we have come down here. We can see we are possibly coming down to test this trend line, which does happen in bump and run patterns. We also have the weekly EMA ribbon here, which is still acting as support. I'd like to see the week close out. That's at around 43,500. And I do think this ribbon will act as support on the weekly. Another interesting thing to note here is when looking at the fib retracement, this is on the log scale, with the fib retracement also on the log settings here, fib levels based on log scale. Can see the overall retracement from the 65k peak to 29k low, and I've just got the 382 level marked here, and then doing the fib retracement from the low here to the high at 53k. You can see the 0.5 level, and these two do line up in a similar area around the 39.4, 39.2 area. And quite often when we get confluence, this could be an area to watch for a level where we would get a bounce. And this would also be in line with this trend line on the log scale. Did get quite close here. We came to around 40,170. But just an area to watch here. So thanks for watching. Hope you enjoyed that analysis comparing the 2013 bull run to the current bull run. I will make another video, as I said, looking at the more smaller time frames. So thanks for watching. I'm Bitcoin Mamo. See you next time. Bye.